Through a special arrangement with ACORD, we're able to bring you inside the Joint Industry Forum in New York to gain insights from some industry leaders who sat in on a CEO panel sharing views from the inside looking out. Here are some of the highlights.
So I guess consistent with AM Best's perspective, we would say the outlook is stable for personal lines, and we're looking at relatively low growth rates for both auto and home for the industry. The economy growing more rapidly, but still not at a really fast clip. We have low inflation, low interest rates. Now new car sales have rebounded, but home sales are still lagging. So all of these make up a basket of triggers for the purchase of auto and home insurance and kind of feed into this stable outlook. But one thing that happened kind of post-recession was really a drawing in of household formation, and we are probably still not back at the level that we were prior to recession. So that is why there's, I think, such a modest outlook relative to personal lines insurance.
I'm a little bit more bullish than Paula from an economic standpoint. I think the second half of the year was very good. The macroeconomic indicators are clearly showing progress, are positive. I mean, car sales are growing, new housing starts are growing, consumer sentiment is improving, low gas prices, although one could argue that there will be more cars on the road, more miles driven, and therefore more accidents, but it's good, it's essentially good.
I think the environments that we operate will continue to flux, but I think you need to think in terms of longer terms and cycles and really what is needed to compete effectively long term. Over the last 2 years, we've been on a big invest agenda to really what we call is just become an easier company to do business with from a customer side, whether it be our agent and brokers customers or the end retail customer. I don't think we as an industry could afford much longer to say that we're not going to be affected by some of the trends on mobile, digital, speed, the millennial generation and their expectations.
We are also making substantial technology investments in dramatically simplifying our infrastructure to make it easier for customers to do business. It's really expensive.
We have to, as a company, even though we're $160 million, have to invest in that same type of technology. So we're making that investment to make sure that we have those same tools, not only for our underwriters and staff internally, but to be able to deliver the products and services that we need to the customer.
I mean, you have to have an invest mindset, but you also have to have a continuous improvement mindset of how do you take cost out and improve process.
Well, the industry's ROE may be around 8 and the growth may be 4 as an industry. If you differentiate within the industry, you see a little bit of variety.
So for the past 2 years, we have had below average catastrophe losses, and certainly that's the wild card in terms of looking at overall performance.
I think we are in a weather cycle right now, which has become a pattern of these high frequency weather events. The low interest environment, Paula was mentioning it as well, that will continue to put pressure on the underwriting side of our accounts.
Balance sheets are strong, surpluses are very high. So in that context, to generate a respectable ROE is going to be very, very difficult, I think. It's going to be very challenging. The compression on margins, as mentioned by Jaime, is a reality, whether it be in the primary sector or in the reinsurance sector. It's certainly there.
There's so much excess capital in the U.S. Property and casualty industry that we have to make a decision in terms of how we see these ROEs. Either we accept the way they are, or we start putting the excess capital to work from a pure financial standpoint.
It's about making the smart decisions, and so not everybody is going to be at that average. You're going to some that outperform the average, and some that don't. And I think in our industry in particular, it's about maintaining the discipline, looking at the locations, doing the loss control, because that does have an effect on the ability to change your future.
Well, risk selection, we have a number of good tools that we can use. We can certainly share those with our ceding companies. And I think that'll drive our continued growth and profitability going forward.
Remember that you're an insurance company. You need to maintain underwriting discipline or you're going to get off course pretty darn quickly. You're going to do what's stupid.
We'd like to thank ACORD for their contribution to our program. For more of our coverage of the 2015 Joint Industry Forum, visit the RIN TV On Demand Library.